What do you know about Bitcoin? Today we are going to answer some most searched question about Bitcoin and internet. It will be super interesting. Welcome to Pixel City. Before jumping, subscribe to know the world around you. What is Bitcoin? Bitcoin is a decentralized digital currency which was created in 2009 by an anonymous person or group of people under the pseudonym Satoshi Nakamoto. Unlike traditional currencies, it operates on a decentralized network, meaning that it is not controlled by any government, financial institution, or company. This makes it a revolutionary technology that has the potential to change the financial world as we know it. How does Bitcoin work? Bitcoin uses blockchain technology, which is a public ledger of all transactions that have ever taken place in the network. This ledger is maintained by a network of computers, known as nodes, which validate and record every transaction. Once a transaction is recorded, it cannot be altered or deleted, making the system transparent and secure. In order to participate in the network and make transactions, a user must have a Bitcoin wallet. This wallet is used to store, send, and receive Bitcoins. When a user sends Bitcoins, the transaction is broadcast to the network, and the nodes verify the transaction and add it to the ledger. What makes Bitcoin unique? One of the key advantages of Bitcoin is that it operates on a decentralized network, which makes it immune to government control and censorship. This means that governments cannot freeze a user's assets or prevent them from making transactions. It also eliminates the need for intermediaries, such as banks, to facilitate transactions, which can reduce transaction fees and processing times. Another advantage of Bitcoin is that it is not tied to any physical commodity or currency, making it a true digital currency. This eliminates the risk of inflation, as there is a limited supply of Bitcoins that will ever be created. What are the risks of using Bitcoin? Despite its many benefits, there are also some risks associated with using Bitcoin. One of the biggest risks is its volatility. The value of Bitcoins can fluctuate rapidly and unpredictably, which can result in significant losses for users. Another risk is the lack of regulation and security measures in the Bitcoin network. Since it operates on a decentralized network, there is no central authority to ensure that users are protected from fraud and hacking. As a result, users must be diligent in protecting their assets and be mindful of the risks associated with using the network. What is Bitcoin mining? Bitcoin mining is the process of creating new Bitcoin by verifying transactions on the Bitcoin network and adding them to the public ledger of transactions, known as the blockchain. Miners use specialized software and hardware to perform complex mathematical calculations in order to find new blocks, which are then added to the blockchain. The miner who finds the new block is rewarded with a certain number of Bitcoins, currently 6.25 Bitcoins. This reward serves as an incentive for miners to continue to perform the necessary work to keep the network secure and stable. How does Bitcoin mining work? Bitcoin mining uses a process called proof of work, in which miners compete to find new blocks by solving complex mathematical problems. When a miner finds a new block, it is verified by other miners on the network, and once it has been confirmed, it is added to the blockchain. The new block also contains a reference to the previous block, forming a chain of blocks that constitutes the blockchain. Each block contains a record of recent transactions, and the blockchain is public, meaning that anyone can see the transactions that have taken place. This makes the Bitcoin network transparent and secure, as every transaction is recorded and can be checked against the blockchain. Investing in Bitcoin, good or bad? Investing in Bitcoin can be a high-risk, high-reward proposition. On the one hand, Bitcoin has seen tremendous growth in recent years, with its value increasing dramatically over a short period of time. This has led many investors to view it as a potentially lucrative investment opportunity. However, Bitcoin is also a highly volatile asset, and its value can fluctuate greatly over a short period of time. This means that it can be difficult to predict how its value will change in the future, and there is a risk that you could lose some or all of your investment. Additionally, investing in Bitcoin is not for everyone. It requires a certain level of understanding of the technology and market, and it can be challenging for those who are new to investing. It's also important to note that Bitcoin is still a relatively new and untested asset, and its long-term potential is still unknown. Before investing in Bitcoin, it's important to carefully consider your investment goals, risk tolerance, and overall financial situation. It's also recommended to speak with a financial advisor who can help you better understand the risks and potential rewards of investing in Bitcoin. In summary, while Bitcoin has the potential to offer high returns, it is also a highly speculative and volatile asset that carries a significant amount of risk. It's important to approach any investment in Bitcoin with caution and to thoroughly research and understand the potential risks and rewards before making a decision. Way criminals use Bitcoin. Criminals use Bitcoin for several reasons, including anonymity. Transactions made using Bitcoin are recorded on a public ledger, but the identity of the person making the transaction is not revealed. This makes it appealing to those who wish to carry out illegal activities without being traced. Lack of regulation. Bitcoin operates outside of traditional financial systems, which means that there is no central authority or government that can monitor or regulate its use. This makes it a preferred method of payment for those who want to avoid government oversight. Cross-border transactions. Bitcoin can be used to make transactions across borders, which makes it easier for criminals to move money internationally without being detected. Irreversibility. Once a Bitcoin transaction is made, it cannot be reversed. This makes it attractive to criminals, as it eliminates the risk of chargebacks, which are common in traditional payment methods such as credit cards. Bitcoin's decentralized and anonymous nature makes it attractive to criminals. It is also used for many lawful purposes. It's important to be aware of the potential risks and to use caution when dealing with Bitcoin. Where and how to buy Bitcoins. To buy Bitcoin or any cryptocurrency, you'll need a crypto exchange where buyers and sellers meet to exchange dollars for coins. There are scores of exchanges out there, but as a beginner, you'll want to opt for one that balances ease of use with low fees and high security. If you don't already have an exchange in mind, check out our top picks for the best crypto exchanges. After choosing an exchange, you have to fund your account before beginning to invest in Bitcoin. Check if your exchange has a Bitcoin wallet built into its platform. If not, you'll need to find one of your own. Once your account is funded, you can place your first order to buy Bitcoin. Depending on the platform you're using, you may be able to purchase it by tapping a button, or you may have to enter Bitcoin's ticker symbol. You'll then have to input the amount you want to invest. If Bitcoin's current price was around $23,000, you'd need to invest that much to buy 1 BTC. If you invested less, say $1,000, you'd get a percentage of a Bitcoin equal to about 0.043 BTC. In conclusion, Bitcoin is a revolutionary technology that has the potential to change the financial world as we know it. Its decentralized network and unique features offer many advantages over traditional currencies, but it is important for users to be aware of the risks involved. Despite its risks, Bitcoin has proven to be a popular and effective alternative to traditional currencies, and its popularity and use is only likely to grow in the future. Thank you. See you.